One handle, two platforms. That handle is the only fingerprint they can't forge. If anyone DMs you for money, wallets, VIP access, or signals, it's a scam. I sell nothing. Ever. Now type 180 in the comments if you're actually locked in, because silver can be up 180% in 1 year and still crash today. And the truth they're hiding isn't a secret meeting. It's the part nobody wants to learn. Trend and path are not the same thing. Stop. This matters, because your two sources show the entire paradox on one screen. FX Leader says spot silver is around $90.20, a 182% increase over the past year, after a heart-stopping peak of 121.64 in late January. Trading Economics' own commodity blurb, captured via crawl, describes the same year-over-year surge, up 180.71% at one point, and also shows how brutal the path is, with silver printing in the low 80s on March 3rd, and even showing a fell to 83 down 7% snapshot in their updates. So yes, both can be true, up huge over the year. Down ugly today, that's not a contradiction. That's silver doing what silver does, shaking out weak hands. And if you don't understand why it does this, you will keep doing the same two things forever. You'll buy after a big green move because you feel late, then you'll sell after a big red candle because you feel stupid, then silver will rip again without you. That's the devil's metal cycle. Let's break it right now. Here's the real truth they're hiding. Silver bull markets are built out of down days that feel like the end, because silver isn't just a metal. Silver is a positioning vehicle. It's thin, it's emotional, it's leveraged in paper markets, and it has a dual identity that makes it behave like two different assets depending on the day. Gold is mostly one identity, trust hedge. Silver is two identities at war, identity 1, safe haven, geopolitical insurance. Identity 2, industrial beta, leverage trade. FX Leaders literally calls silver a dual threat asset, safe haven and backbone of the green energy economy. And that dual identity is exactly why the 1 year chart can look unstoppable while today's candle looks like betrayal. Now listen carefully, because this is where your audience levels up. A 1 year move is driven by macro regime. A 1 day move is often driven by liquidity regime. Macro regime is big money deciding, war risk, currency risk, supply deficits, industrial demand, hard assets matter. Liquidity regime is something uglier, dollar spikes, yields move, margin calls spread, risk desks tighten, and high beta trades get flushed. Silver lives in both regimes, so when the liquidity regime hits, silver can dump hard even when the macro regime is still bullish. That's how you get up 180% and crashing today. Now let's extract the exact material your sources give clean and usable. From FX Leaders, the factual anchor points are silver at $90.20 per troy ounce, up 182% over the past year, a peak at $121.64 in late January, a battle map with levels $91.33 pivot, make or break for intraday reclaim, and $97.69 as the recent highs target if it holds. $100 as the psychological barrier. They claim a break could trigger short squeeze behavior as desks scramble for delivery. $87.69 must hold support, 200 period MA, and if it breaks, a slide toward $82 or $84.90 where whale buyers may step in. And their pro playbook framing, buy the dip entry $87.70, $88.50 targets $91.30 and $97.50. Stop below $84.90. From Trading Economics, here's the key macro plus path punch. Their crawl excerpt explicitly says silver is up 180.71% year over year at one point, and references war shipping risk language, and also shows a conflicting same-day update where silver fell to 83, down 7.04%, and a separate update line showing silver rose to 89.60 and still up big YoY. If your viewer is thinking, wait, why does Trading Economics show different numbers? That's normal in live feeds. It's updated frequently and can show different snapshots depending on when the page is crawled. The point is stable. Huge year-over-year gains and violent day-to-day moves can coexist. Now we build the story. Silver's up 180% in a year because the market has been repricing it as both a monetary hedge in unstable times and an industrial necessity in the electrify everything world. FX Leaders even throws numbers at the industrial side. They claim solar already consumes 125 million ounces a year, and EVs could add another 75 million ounces in demand projections, framing unprecedented demand. Whether you take those exact demand figures literally or not, the narrative is clear. Silver is being treated as strategic. So why the crash today? Because the market doesn't reward you for being right. It rewards you for surviving the path. And the path is where silver pays its bill. Silver charges you a toll, and the toll is volatility. Stop. Pattern break. Gold moves like a river. Silver moves like a spring. You can compress a spring for weeks, then it snaps. But the snap doesn't happen without compression. And compression doesn't happen without shakeouts. So the truth isn't hidden. It's uncomfortable. Silver's bull run is designed to feel fake in the middle. Now, here's the part that will keep retention high. The viewer wants to know, okay, so is this crash the end or the setup? And the honest answer is, it depends on whether this is a flush or a break. Flush, forced selling, then fast rebound. Break, demand disappears, bounces get weaker, price can't reclaim. So the only truth you need is not a secret stat. It's one behavior, rebound speed, not the bounce size, the speed. Fast rebound after a slam. Mechanical selling ended and buyers were waiting. Slow bleed. Demand not committed and the unwind isn't done. Now I'm going to make it even simpler. Silver has two modes. Mode 1, breakout mode. You get headlines like race to $100, momentum chasers pile in, price accelerates. Mode 2, flush mode, dollar tightens, volatility spikes, leverage gets margin called, and silver gets sold like collateral. That's why race to 100 content and crashing today content can both be true. They're describing different modes. Now here's the trap the market sets on purpose. It gets everyone staring at $100. It puts $90.99, $9.99 in everyone's brain. So late money chases. Then the market only needs a small catalyst, anything, to trigger a cascade. And silver cascades because it's thin. That's why $100 is not just a target, it's a magnet. Magnets attract crowds, crowds create liquidity, liquidity gets harvested, that's markets. Now let's use FX Leader's own Fight Is On section as your watch list engine, because it's already written in a high retention way, and we're going to optimize it. They say $91.33 is the pivot, $87.69 is the line in the sand, $82.84.90 is the whale zone. So here's how you turn that into a mission for the viewer. If silver is crashing today, you don't panic. You locate where you are on the map. Are we below 91.33? Are we below 87.69? Are we inside the 82.84.90 band? Because those bands define whether the move is still cooling inside an uptrend or breaking into something worse. Now, Trading Economics crawl excerpt shows silver printing around the low 80s in the same day update line. That means by this map, the market is already testing the battlefield zone that FX Leaders describes as where strategic buyers might step in. So the moment is real. And this is exactly why your title works. Because it forces the viewer to face the difference between trend and path. Now stop, pattern break again. This is the part you must say out loud. A market that's up 180% in a year is not safe. It's crowded. Crowded markets don't fail because they're wrong. Crowded markets fail because too many people use leverage, and leverage gets punished first. So the truth they're hiding is simply this. Silver isn't moving against you. Silver is removing the people who can't hold through volatility. Now, FX Leaders also includes expert forecasts, like JP Morgan averaged 2026 at $81 and Bank of America $135, and a gold-silver ratio discussion around 59.1. Treat those as narrative fuel, not a promise. But they serve one purpose in your script. They show why the market is obsessed. When people start throwing around triple-digit silver, it creates a crowd. Crowds create volatility. Volatility creates flushes. Flushes create the next leg, if the macro regime stays supportive. Now we do the OG-style binary scenario analysis, because this is where retention spikes. Scenario A, today is a flush inside the bull trend. Silver tests the 82.85 band, then rebounds quickly, reclaiming 87.69. Then reapproaches 91.33. In that scenario, the race to 100 narrative returns, but cleaner because leverage has been washed out. Scenario B. Today is a break, and the unwind isn't done. Silver breaks below the zone and can't reclaim. Bounces are weak. Price drifts lower. In that scenario, the market is telling you liquidity stress is still in control, and the macro bid is not ready to overpower it yet. We don't guess which scenario is true. We watch behavior. Now I'm going to give you a 48-hour checklist built only from your sources. This is the part viewers will come back for. Watch 1. 87.69 reclaim. FX Leaders calls it the must-hold line in the sand. If price reclaims it quickly after a dump, that's flush behavior. If price can't reclaim it, the market remains fragile. Watch 2. 82.84.90. Response FX Leaders calls this the zone where whale buyers may step in if 87.69 breaks. Trading Economics crawl shows silver printing in the low 80s in one update. So watch what happens here. Does it bounce fast or does it slice through? Watch 3. 91.33 pivot. FX Leaders says if silver retakes and holds above 91.33, the path toward 97.69 is open. If it can't reclaim 91.33, the market is still in cooling repair mode. Watch 4. $100 behavior. FX Leaders frames $100 as the psychological barrier where a break could ignite squeeze dynamics. The point isn't the word squeeze. The point is round numbers create crowd behavior. So if price approaches $100 again, expect violence, either breakout acceleration or another rejection. Watch 5. Keep the big anchor in your head, 121.64. That's the January peak both sources reference. The closer price gets to that region again, the more fragile the tape becomes because everyone is staring at the same mania print. Now we close OG style, 3 takeaways plus cliffhanger plus disclaimer. Takeaway 1, FX leaders report silver around 90.20, up 182% over the past year, after peaking at 121.64 in late January. Takeaway 2, FX leaders defines the battlefield levels, 91.33 pivot, 87.69 must hold support, and $82.84.90 as the next zone if support breaks. Takeaway 3, Trading Economics crawl excerpt shows the paradox in plain text. Massive year-over-year gains alongside violent day-to-day swings, including a low 80s print and a down 7% snapshot in one of their updates. Now the cliffhanger. If silver bounces fast out of the 82.85 band and reclaims $87.69, today wasn't the end, it was the cleanse. And if it doesn't, if it bleeds and can't reclaim, then the market is telling you the leverage flush isn't done yet. This isn't financial advice. This is financial warfare education.